Okay, so in the first video, I think we have discussed about the characteristics of GST, right? So let's look at those characteristics again, which says input tax credit ITC is allowed. ITC is the word, it is used very commonly. No cascading effect. GST collected is liability, not income. And GST is on value added tax, right? Let us see all these through an example. Okay, let's see this example. So there is a manufacturer, which is Sharma Traders. There is a wholesaler, which is Bright Stationery. There is a retailer, which is Sunrise Books, and then ultimately the customer. Okay, now look at this. Sharma Traders is the seller, is the manufacturer. If from the color you can see, and it sold the goods to Bright Stationery. He is the buyer. Okay, and the bill amount is 60,000. So in this case, because he is the manufacturer, the entire value becomes the value addition, right? So let's assume the GST percentage is 12%. So there will be 7,200 rupees of GST which will get collected on this bill. So the total bill will become 67,200. But from because this is the GST which Sharma Traders has collected and it is payable to the government, right? 7,200. Now you see what happens next is interesting. Okay. Now, Bright Stationery, who is the wholesaler now, will sell goods to the Sunrise Books, right? And he is selling the same 60,000 bill amount uh, worth of goods to in 90,000 rupees, right? So what is the value addition? 30,000 rupees, right? 30,000 rupees is the value addition. So what is the total GST on 90,000 into 12%, which will become 10,800, right? But you see, the Bright Stationery, while paying to Sharma Traders, have paid 67,200. That means it has already paid 7,200 rupees in the form of GST to Sharma Traders, and Sharma Traders in turn has deposited in the government account, right? So Bright Stationery has already paid 7,200, right? So the total GST which Bright Stationery will collect from Sunrise Books will be 10,800. So the invoice will be 90,000 plus 10,800, which is 1,08,000 rupees, right? However, while Bright Stationery, when it will pay to the government, it will pay 10,800 minus 7,200, which he has already paid. So he will net pay 3,600 rupees only. Getting my point? This is very important concept because it is avoiding cascading. The ITC is available. So this 7,200 is ITC, right? Which is input tax credit. Now let's see further. Now what happens now? Sunrise Books have technically paid 10,800 to Bright Stationery, right? So what it will now in the next thing, Sunrise Books is selling to the customer directly, right? So now the bill amount is 1,20,000. Again, the value addition is 30,000 rupees, right? So what will happen is that the Sunrise Books will collect 1,20,000 plus 14,400 of GST, which will be 1,34,400. Correct? Now, this 1,20,000 means into 12% will become 14,400. So, how much he will collect from the customer is 14,400. And how much? 1 lakh 34,400 he will collect from the customer. Now, how much GST it will pay to the government? It will pay 14,400 minus the GST which he has paid in the previous step is 10,800. So net again he will only pay 3,600 as the GST, right? So the total GST collected by the government will be 14,400 rupees, which is actually the amount at which the goods are sold to the ultimate customer. If you apply the GST rate, it will be that rate. But at each stage, you see, you are getting the ITC credit, and the net payment to the government is net of ITC credit at each stage. Like for example, Sharma Traders is paying full 7,200 because there was no GST set off which was available. Bright Stationery, though the bill he is charging to Sunrise Books is 10,800, but he has in his books 7,200 in the form of ITC credit. So net he will pay 3,600. Similarly, the Sunrise Books, when it is selling to the customer, what it will do, the total GST is 14,400, but the GST available which he has paid to Bright Stationery in the previous step is 10,800, which will come as an ITC credit to him, and the net payment made by Sunrise Books is 3,600 rupees, right? So this is a very important concept of ITC credit, and even when we will do accounting at the next stage, you will this will become very, very important. I hope you understand this concept. Let's meet up in the next video. Thank you very much.